Good morning, everyone, and welcome to the Sales and Use Tax Basics webinar with the North Carolina Department of Revenue. Before we begin, I do want to go over a couple of housekeeping items. When you first entered the webinar, you were automatically muted. We do ask that you do not attempt to unmute yourself at any point in time throughout the duration of today's event. If you do have questions, we ask that you place those in the chat box, and the messages will be sent directly to my host. I will stop at various points throughout today's presentation and ask if there's any questions that should be stated aloud. So just be patient with my host if she does hold off on responding to you because she might be waiting for that point in time. At the conclusion of the presentation, my host will be placing a link in the chat box with a survey. If you can let us know what you thought of today's presentation. So now that we have covered those items, I do want to go ahead and formally introduce myself. My name is Kayla DeMaria, and I am currently with the Knowledge, Education, and Outreach Group with the North Carolina Department of Revenue, and I'm currently an administrative officer. I also have on the line with me my host. So, ma'am, if you would like to introduce yourself.
Hello, everyone. My name is Courtney Curtis, and I will be your host for the webinar this morning. I am currently the training coordinator for the Knowledge Education Outreach Group, also at the Department of Revenue, and I've been with the agency for 11 years. I greatly welcome you all and encourage you to ask questions throughout the presentation today. And as Kayla mentioned, either I will respond back to you in the chat or address it aloud with her. But back to you, Kayla.
All right, thank you, Courtney. So to ensure the best audio quality for today's presentation, my host and I will now be turning our cameras off. So thank you again, everyone, for joining us for today's Sales and Use Tax Basics presentation. In this webinar, we will cover an overview of sales and use tax and provide you with steps to be in compliance with tax obligations for the state of North Carolina. Now, I do want to note that participants are encouraged to contact the department's customer service number or visit the website to obtain information that is not covered in this presentation. Before we get started, I do want to go over a quick disclaimer. This presentation is for general information only, and therefore the presentation content should not be interpreted as specific tax advice for a specific tax situation. Additionally, the presentation does not take into consideration draft or future legislation. So if you can utilize that chat box feature, if you can let Courtney know what type of industry are you representing, and if you've already gone through the process of obtaining a North Carolina Sales and Use Tax Account ID. Courtney, if you can just let me know once you start getting some responses in chat.
Will do. All right, we've started getting some responses in the chat. As far as people currently being registered for sales and use tax accounts, we've got a mixture of yeses and nos. And then for the types of industries being represented today, we have cosmetology and consulting, accounting services, online clothing store, cleaning business, coffee shop, pet groomer, ice cream food truck, a wide range of different industries this morning.
Definitely. Well, thank you all for joining us for today's presentation, and hopefully you'll gain some insightful information today. So our topics for discussion during the presentation, this is considered a high-level overview and is not considered all-inclusive. So some of the topics will include an overview of sales and use tax, determining the process of completing the registration application to obtain a North Carolina Sales and Use Tax Account ID number, determining the sales or consumer use tax rate that applies based on sourcing principles, introduce the forms used to report sales and or remit consumer use tax, and finally, we will provide additional information and recommendations and resources from there. Before we dive into the topics that will be discussed today, I do want to share a few resources. The first one is a resource guide. The resource guide has been made available on the department's website, and it does list links to helpful resources that I will reference throughout the presentation today. Please note that some of the resources found within this guide are not directly linked to the department website, but they are suitable for use in assisting your business with meeting your tax obligations. Upon completion of today's webinar, we do recommend that you access the guide to obtain further detailed information. One specific item that is linked in the resource guide just mentioned is the Sales and Use Tax Bulletin. This resource is beneficial to current and prospective business owners responsible for sales and use tax remittance. The Department of Revenue does publish this bulletin on our website, which is ncdor.gov, and it does provide the department's interpretation of the sales and use tax laws. Within the bulletins, you'll be able to find information pertaining to general sales and use tax requirements, as well as guidance on specific industries. Additionally, the department does provide sales and use tax directives for topics impacted after the regular session of the General Assembly has ended. So now that we have outlined the scope of the presentation today, let us begin with the first area of discussion: what is sales and use tax? So to assist you in understanding what sales and use tax is, let's review when sales tax or consumer use tax would apply. Sales tax is a tax imposed on a retail merchant that is engaged in business in North Carolina. Sales tax is calculated on sales of taxable tangible personal property, which is personal property that may be seen, weighed, measured, felt, touched, or is in any other manner perceptible to the senses. Sales tax is also calculated on certain digital property or certain services, including repair, maintenance, and installation services, also referred to as RMI. Sales tax is paid by the consumer to the retailer. The retailer will then remit the sales tax collected from customers back to the department on an established frequency, which is first established when they register their business. Sales tax is considered a trust tax because the money is held in trust for the state. Alternatively, there is consumer use tax. Consumer use tax is due by individuals and businesses for tangible personal property, certain services, certain digital property that is purchased, leased, or rented inside or outside North Carolina for storage, use, or consumption in North Carolina. Consumer use tax is typically owed on purchases for use from out-of-state vendors who did not collect North Carolina sales and use tax on items shipped to locations in North Carolina for storage, use, or consumption. This tax is paid by the purchaser of the product. If a business has a requirement to report sales tax or remit consumer use tax, they will do so on the Form E-500, which will be discussed later on in the webinar. As identified on the prior slide, sales tax is collected from customers by retailers and remitted back to the department. To better understand this process, let's review an example from a retailer perspective. Jane taxpayer walks into a clothing store in Raleigh, North Carolina, which is part of Wake County, and purchases a shirt. She would pay sales tax at a rate of 7.25% of the sales price, since it was received in Wake County. The clothing store, who is considered the retailer, would collect the sales tax and remit it to the department. Understanding the definition of engaged in business is the first step in knowing if you should obtain a North Carolina sales and use tax account ID. This term is statutorily defined as part of General Statute 105-164.3, subsection 83. As you can see on my screen, there are several identifying factors in determining if a business is considered engaged in business for sales and use tax purposes. The information shown here is not all-inclusive, so I do encourage you to review the definition upon conclusion of the webinar. This term is linked in the resource guide that was previously mentioned as well. If upon review you are unable to determine if you are considered engaged in business for sales and use tax purposes, please call the department or visit a local service center. Now that we have identified an example of sales tax and when it would apply, as well as identified where you can find more information on the term engaged in business, let's review an example of consumer use tax. A retailer purchased a cash register for use within their business. The cash register was purchased online and shipped to North Carolina from an out-of-state vendor that did not collect sales or use tax. The North Carolina retailer owes consumer use tax because sales tax was not paid on the purchase and the cash register was used in North Carolina. All right, now that we have an overview of sales tax and consumer use tax, let's take a look at how to obtain an account number from the North Carolina Department of Revenue. But at this time, Courtney, do we have any questions that need to be addressed aloud?
Yes, we do, Kayla. This person asked if a business is responsible for paying consumer use tax, how often is it paid?
Okay. If a business is responsible for remitting consumer use tax, the business will remit the tax monthly or quarterly. And that is based on their filing frequency election. And they will report that on their sales and use tax return, which is the Form E-500. The amount will go under the purchases for use column.
Thank you.
Are there any other questions?
That was it at this time.
Okay, thank you. If it is determined that a business meets the definition of engaged in business, then they must register with the Department of Revenue. Before completing the North Carolina registration application, we encourage you to review the Prepare to Register Your Business portion of our website. This section of our website provides information needed before the business registration application can be submitted to the department. Information that needs to be gathered includes, but is not limited to, identifying which identification numbers you need in order to complete the business registration application, and what contact information is needed for your business. For more information on this process, we encourage you to watch the How to Register Your Business video on our YouTube channel. Once you have all the necessary information, you can proceed with completing your registration. You can register for a sales and use tax account electronically or complete a paper application, Form NCDOR. We strongly encourage you to utilize our online option, which is referred to as our online business registration. However, I do want to mention there are some tax accounts, tax schedules, or service charges that cannot complete an online application and are required to complete a paper form or may need to complete a different registration application entirely. No matter which application is applicable, the department does not charge for the account number to be obtained. To find additional information on which application applies, please visit our website. Please also be advised that before a person may engage in business as a retailer or a wholesale merchant in this state, the person must obtain a certificate of registration from the department. For the scope of today's presentation, we will review the lines for our paper form NC-BR, which are the same questions if the application is submitted electronically. The form is 3 sections in length, with the first covering demographic information of your business. The second section is utilized to obtain a withholding tax account ID, and the third section is in reference to sales and use tax or other charges. Since the presentation today is in reference to sales and use tax basics, let's dive into section 3. As mentioned previously, a business may find it advantageous to review the Prepare to Register Your Business portion of our website, since it documents the information required to complete the business registration application. To assist you in knowing what information is required, I will review specific questions asked on the application. The first question asked is, when will you start selling or purchasing items or services subject to North Carolina taxes and/or service charge? The date you enter in that field will determine when the department will begin expecting returns filed for the given tax identified as part of this section. As noted on the form, you'll be required to file a return beginning with the month or quarter you indicate. The next question is if your sales or gross receipts will be retail, wholesale, or both. If you need assistance distinguishing between the two, please visit our website. Next, you identify the type of business you are registering to be engaged in. For the web fill form NC-BR or the online registration, you'll utilize the drop-down menu and select the option that is best associated with your business. Some of the other items listed on the registration include identifying if you're registering only to remit consumer use tax on purchases, or if you will be a seasonal business, which means you will be operating 6 months of the year or fewer. Please note, if you are a seasonal business, your filing frequency election will automatically be monthly. We will address the majority of the remaining questions on the upcoming slides. And finally, for future reference, if your business ever needs to close an active sales and use tax account number, please call the department or complete our online out of business notification form, which is called the NC-BN. As shown on the previous slide, a question asked on the business registration application is what accounting method you will use for sales and use tax purposes. For the cash basis of reporting, the seller will report the sale when payment is received, regardless of when the transaction took place, whereas for the accrual basis of reporting, the seller reports the sale at the time the transaction takes place, regardless of when the payment is received. If you need assistance with making this determination, I would encourage you to review our Sales and Use Tax Bulletin, Section 2. Some of the other questions on the business registration application are yes and no questions, in which you would designate yes if they apply to your business or no if they do not apply. Each time the yes field is completed, you will receive written notification from the department identifying your filing requirement. Please note, if you are responsible for filing any of the returns shown here, you must file a paper return and there is not an electronic filing option. On this slide, we will identify the form type and what tax account, tax schedule, or service charge they correspond to. Form E500E is the combined general rate of tax. Examples of items remitted on this form include electricity, pipe natural gas, and phone and TV provider services. Form E500F is the motor vehicle lease and subscription tax. This form is used to report short or long-term car rentals where the highway use tax was not paid at the time of purchase, or if your business offers a vehicle subscription service. Form E500G is used to remit the scrap tire disposal tax. This tax is collected on the retail sale of new tires and is due in addition to the sales and use tax rate. The white goods disposal tax is remitted on Form E500H. Some examples of where this tax applies includes, but is not limited to, refrigerators, freezers, dishwashers, and water heaters. This tax is due in addition to the sales and use tax. And lastly, Form E500L is used to remit the fee charged on 911 service charges on prepaid wireless telecommunication services. For example, the sale of a prepaid wireless phone or the recharge of a prepaid wireless account. This fee is in addition to the sales and use tax. The last part of the business registration application we will identify in this presentation is the filing frequency. For this process, you will need to determine how often your business will file and pay sales tax or remit consumer use tax to the department based on your expected tax liability. Please note, once a filing frequency is selected on the initial business registration application, the Secretary will review the business's filing history, and if another frequency applies, you will be notified in writing via a notice of change in filing frequency. Before I review the filing frequency shown on my screen, I do want to make mention of an exception. As shown on the business registration application, if you are engaged in the business of providing and selling prepaid wireless telecommunication services, you have the option to deem yourself a monthly or semi-annual filing frequency. For more information, please visit our website. Now, from introductions this morning, everyone introduced would fall under the three main filing frequencies that are designated for sales and use tax purposes, which are quarterly, monthly, and monthly with prepayment. The quarterly filing frequency is when the tax liability is consistently less than $100 per month. The department does operate on a calendar quarter, for sales and use tax purposes, so please keep that in mind no matter how your business files their income tax return. For quarterly filers, the sales and use tax return and payment are due on or before the last day of the first month following the quarter end. For example, a business filing the first quarter return, which consists of January, February, and March, the return will be timely filed on or before April 30th. The monthly filing frequency is when the tax liability is consistently at least $100 per month, but less than $20,000 per month. For monthly filers, the sales and use tax return and payment are due on or before the 20th day of the following month of the period being filed. For example, a January return will be timely filed on or before February 20th. The last filing frequency is monthly with prepayment. Monthly with prepayment filing frequency is when the tax liability is consistently at least $20,000 per month. The due dates established mirror the monthly filing frequency. However, your business is required to make a prepayment of at least 65% of one of three methods. To find additional details on the prepayment amount and method, please visit the filing frequency portion of our website. Although we encourage electronic filing with all of our filing frequencies, I do want to make you aware if you are a monthly with prepayment filer, you are required to file your returns electronically. The last item I want to address with all of the filing frequencies is that if the due date falls on a weekend or a holiday, it is considered timely filed if it is filed on or before the next business day. All right, we do have a quick check your knowledge if you can just place your responses in chat. So we've got Filing LLC started their paper selling business on January 1st of 2024, and they are a quarterly filer. So if you can let Courtney know, when would their first return be due?
All right. In the chat, I'm seeing April 30th.
Okay. And that is correct. So we've got April 30th of 2024, and that filing period is from January 1st of 2024 through March 31st of 2024. And what if they were a monthly filer? When would their first return be due?
All right, so for that one, I'm seeing a mixture of answers. I'm seeing February the 15th, February the 20th, February 28th, March 1st. Which one would that be?
Okay. So that one is going to be considered timely filed February 20th of 2024, and that filing period would be January 1st through January 31st. So then, again, just a reminder, if you are monthly, you are going to have your return due on or before the 20th day of the following month of that period being filed. So thank you for everyone's participation with that. So Courtney, before we proceed on, are there any questions that need to be addressed aloud?
Yes, we've had several people ask this question, and this is something that we commonly get with the sales tax webinar. But they asked, if a business selects the quarterly filing frequency when they register, should they contact the department if they collect more than the threshold amount?
Yeah, so great question. So a business is responsible for selecting your initial filing frequency on your business registration application, but you will not need to monitor the sales tax collection beyond that initial designation. The department will notify your business if your filing frequency needs to be adjusted based on, again, that initial designation on your registration application.
Thank you.
All right, thank you. All right, so the next section we will discuss is how a retailer determines the correct sales tax rate to charge. So to know the sales tax rate is to understand what it consists of. So generally the sales and use tax rate is broken down into the general state rate plus the applicable county rate, which you may also hear termed a local rate. The county rate that should be charged is based on sourcing principles that will be discussed on the next slide. In addition to the general state rate and the applicable county rate, a county has the option to levy a transit tax. As of today, the counties listed on my screen have levied that tax. However, please be aware that a more specific rate may apply to the sales of certain items. To determine if a more specific rate does apply, or to see what the current sales and use tax rates are per county, please review the county tax charts that are made available on the department's website. So as mentioned, the portion that is fluctuating to make a tax rate change in each county is the county portion of the rate. So how does a retailer know what county rate to charge? For North Carolina sales and use tax purposes, the county rate is determined by sourcing principles. Generally, tangible personal property is either sourced over the counter or it is delivered to a specified address. The term over the counter means the purchaser received an item at a business location of the seller, and therefore the sales and use tax charged is sourced to the business location. For delivery to a specified address, the purchaser receives an item at a location other than the business location of the seller, and therefore the sale is sourced to the location where the purchaser receives the item. To find a more inclusive listing of how to source the sale of a product or service, please visit our website, or you can review the general statute shown here, which is General Statute 105-164.4b. So as noted previously, the tax rate information has been made available on the department's website. The charts shown on the screen are a couple of the example resources that can be used to help determine the appropriate sales tax rate to collect or consumer use tax rate to remit. Please be aware that since sales and use tax rates can change, we do advise that you do not save, download, or print any of the charts on our website, but rather you should access the charts as the transactions occur. We also encourage you to subscribe to e-alerts to get notifications of when tax rates change. Now that we have identified how a business would know what sales tax rate to charge, let's go over an example of when a purchaser receives an item at the business location. A customer purchases a physical copy of a book at your store in Durham County, and they receive the book in the store. Since the sale is sourced to Durham County, you would charge sales tax at a rate of 7.5% of the sales price, which is the current sales tax rate in Durham County. Alternatively, a sale may be sourced to a location other than the business location. An example of that transaction would be if a customer shops at your shoe store in Alamance County. Your store did not have their size in stock, therefore your shop shipped the shoes to the customer's home in Mecklenburg County. You would charge sales tax at a rate of 7.25% of the sales price, which is the current sales tax rate in Mecklenburg County. All right, Courtney. And now that we've gone over how to source the sale of a product to determine the right sales tax rate, before we get into how they actually report the tax, do we have any questions?
Yes, and I forgot to ask this one at that last section. But is there a fee to complete the business registration application?
Great question. So no, the Department of Revenue does not charge any kind of fee to complete the business registration application. We just encourage you to, of course, go directly to our website to access the downloadable form or do the online application. But either way, there is no fee to get that registration completed.
That was it. Thank you.
All right, thank you. So the Form E-500 is the department sales and use tax return that is used to report sales tax or consumer use tax by a business that is engaged in business in our state. If consumer use tax is due on purchases, it is reported under the purchase for use column. whereas tax due on taxable sales is reported under the receipts column. The frequency in which a business must complete this form is based on their designated filing frequency. We will go over a resource later in the presentation that can assist a business with making sure they do this process timely. So a business responsible for filing this form must file the return for each period that becomes due, even if there is not tax owed on the form. For quarterly and monthly filers, a business has the option to remit this form electronically, via web fill form, or paper form. If you elect to file it in a manner other than electronic filing, you must either mail in the return and applicable payment or hand deliver the form to a local service center. We highly encourage your business utilize the e-services option by electronically filing. For monthly with prepayment filers, you must electronically complete this form. On the upcoming slides, we will review how to complete an electronic Form E500. Now that you are ready to proceed with the filing of your business sales and use tax return, let's take a look at what information is needed to complete the electronic filing of the return. On the first screen, you will enter the name of the person completing the tax return in case the business needs contacted in reference to the return filed for a given period. Next, you will enter the email address in which you would like the confirmation of this return being filed and/or paid sent to. And lastly, include the phone number that we can reach you at. Once all of that information is provided, the next screen will have you enter the sales and use tax account ID number that was assigned to your business by the department. The following screen will have you confirm the information shown is correct, in which you will either correct the information if there are errors, or you will proceed with the filing of the return. Once that is verified, you will select from the listing of filing options. After entering in the information and selecting Next, you will identify the period of the tax return being filed, enter the applicable Social Security number or Federal Employer Identification number based on your structural type, and then you are ready to proceed with filing your tax return. Once all of those actions are taken, you will see the screen shown here. This screen is confirming the period being filed, the period due date, your account ID or streamlined account number, and finally, the business name. As shown in this image, you have the opportunity to select that you'll be filing a no tax due return. As mentioned prior, you must file a return for each period that becomes due, even if no sales tax was collected or consumer use tax should be remitted. On line 1 of the E500, you will enter the North Carolina gross receipts. This is the total receipts that you made for the period, and it does include your taxable sales, your non-taxable sales for resale, and any exempt sales from the business. Please note you should not include the sales tax collected as part of your gross receipts amount. For line 2, the business will enter the total amount of sales of items sold for resale, sublease, or subrent. The amount entered on this line should not be included as part of line 3 or on any other lines later on the Form E500. In relation to line 2 of the sales and use tax return, an important form we need to discuss is the E595E, Streamlined Sales and Use Tax Certificate of Exemption. Form E595E is issued by a purchaser and given to a seller when the purchaser is buying items that would otherwise be taxable. By issuing this form, the seller will consider the transaction an exempt purchase and not charge the purchaser sales tax at the time of the purchase. For this form to be considered complete, the purchaser must provide a completed and signed certificate of exemption or electronically provide the required data elements other than a signature to the seller at the time of the sale. Now that we have determined when this form would be completed, let's review the process of filling out the form. For number 1, the purchaser will check this box if only making a single exempt purchase. If a purchaser is making multiple exempt purchases, the purchaser does not need to check this box. For number 2, the purchaser will enter their name and address along with the name of the seller and their address. For number 3, the purchaser will enter the type of business. For example, if you are reselling the items, you would select box 10, Retail Trade. After you've provided your type of business, you will enter your reason for exemption in number 4. If you are utilizing this form to resell items, you would select box G, Resale Number. Your resale number is a 9-digit sales and use tax account ID number that was assigned to you by the department. For number 5, you will enter the identification number for the state in which you are claiming the exemption. For more guidance on this, please see the form instructions on the website. And lastly, if you're completing a paper form, you will need to provide your signature, title, date, phone number, and email address in number 6. Please keep in mind, this form should be provided to each seller in which you are claiming an exemption. For additional information, please see our Sales and Use Tax Bulletin, subsection 5, or review the instructions of the form. All right, Courtney, so we've got another question to ask the group. So if you can let Courtney know in chat what you guys think. So we've got Simply LLC buys cleaning supplies from Tops LLC to sell in their local store. Could this transaction be considered a tax-exempt purchase?
All right, the majority of people are saying yes in the chat.
Okay. And that answer is yes. So why could that be considered a tax-exempt purchase?
Is it because it's a sale for resale?
That's absolutely correct. And due to it being a sale for resale, what type of documentation should Tops LLC receive for this purchase to be tax exempt?
Is it the E595E?
Perfect. Yep. So that form we just previously went over, which is the Form E595E, Streamlined Sales and Use Tax Agreement Certificate of Exemption. So great. All right, so to further that example, we've got Simply LLC did provide Tops LLC a streamlined certificate of exemption, so that Form E595E, for those cleaning supplies that were purchased for resale. Simply LLC took one of the cleaning supplies off the shelf to use at the business. Does Simply LLC owe tax on this item?
All right, they're saying yes in the chat.
Perfect. And what should Simply LLC report?
Would that be consumer use tax?
Yep. So they are going to report consumer use tax on the purchase price of the product. So great job, everyone, and thank you for your participation. So proceeding to line 3 of the sales and use tax return is the receipts exempt from state tax. On this line, you will enter the total amount of sales and gross receipts exempt from state sales and use tax. This amount should not include sales entered on line number 2. An example of an item exempt from state tax that we will briefly review later is qualifying food subject to a local 2% rate of tax. For a more inclusive listing on examples that would go on this line, please visit our website. Now that we have identified the purpose of lines 1 through 3, let us see what each of the columns mean that are used to compute the tax owed. The first column in which figures can be entered is the purchases for use column. The purchases for use column is the total purchase price of taxable items you purchased inside or outside of North Carolina for storage, use, or consumption in North Carolina from vendors in which sales tax was not collected. This column does not include items you purchased for resale purposes. The next column is where a business enters receipts. Receipts are the total amount of your taxable receipts, rentals, and sales, excluding the amount of tax collected. The amounts placed within the purchases for use and receipts column will be subject to a specific rate listed on each line. Therefore, the rate column determines the rate in which the sales or consumer use tax is computed. And finally, the tax column is the total sales and/or consumer use tax owed on that row. Please note that each of these items will have to be manually entered if completing a paper or web fill form, including the computation of the tax owed. If you complete an electronic form, the tax will automatically compute based on the information entered in the other tax type columns. Some retailers are engaged in the business of selling items that are taxed at only the state rate and no county rate is levied on those sales. If you're a retailer engaged in the business of selling aircraft or qualified jet engines, the sales are reported on line 4. The sales price of each boat sold at retail, including all parts and accessories attached to the boat when it is delivered to the purchaser, is subject to 3% state rate of sales and use tax, which is reported on line 5. And lastly, if you are engaged in the business of selling manufactured or modular homes, the transactions are reported on line 6 and 7, respectively. Some of the items just mentioned do have a maximum tax collected or are only taxed on a certain amount of the sales price. For more information on each of these items, please review the Sales and Use Tax Bulletin or call the department. So the next line is line 8 of the Form E500, and that is the 2% food rate. So on this line, you will enter the total amount of your taxable receipts or purchases of food products that are exempt from the state tax but are subject to a 2% local rate of food tax. This amount will not be entered on lines 9, 10, or 11 that will be discussed on the next slide. Please keep in mind the 2% food rate does not apply to prepared foods other than bakery items sold without eating utensils by an artisan bakery. It also does not include soft drinks, candy, alcoholic beverages, and tobacco. And that's not an all-inclusive listing, so we do encourage you to look at our Sales and Use Tax Bulletin to find some additional treatment of how food items are taxed. Lines 9 through 12 of the Form E500 are the county and transit rates. On line 9, you will enter the amount of purchases or receipts that are in a county imposing a 2% local rate of tax. Counties at this rate would have a tax rate levied at either 6.75% or at 7.25% if the county has also levied the 0.5% transit tax based on our current sales and use tax rates. On line 10, you will enter the amount of purchases or receipts that are in a county imposing a 2.25% local rate of tax. Counties at this rate would have a tax rate levied at either 7% or at 7.5% if the county has also levied the 0.5% transit tax based on our current sales and use tax rates. On line 11, you will enter the amount of purchases or receipts in a county imposing a 0.5% transit tax. Currently, Durham, Mecklenburg, Orange, and Wake impose a 0.5% transit rate of tax. Lastly, line 12 of the form should not have an amount entered next to it. As of today, no county has levied this rate of transit tax. If this changes, the department will publish notification. And as stated earlier in the presentation, to see the listing of current sales and use tax rates, please visit our website. So in addition to the Form E500, your business may be responsible for completing the Form E536, which is a schedule of county sales and use tax. Form E536 is required to be filed if your business utilizes the electronic filing option of the Form E500, or if your business elects to file a paper return and either has to report sales and use tax in more than one county, or you have a requirement to remit county tax for a county other than where your business is located. If this form applies, your business will enter the tax amount for each county next to the corresponding county that's listed on the form. The taxable receipt should not be entered. The information used to complete this is pulled from your sales and use tax return, specifically lines 8, 9, 10, or 11. Currently, again, line 12 has not been levied by any of the 100 counties. This form is 4 pages in length, with an amount from line 8 being reported on the bottom of page 4 if you do have qualifying food subject to the 2% food rate. We also do have a video that does assist a business with completing this form on our YouTube channel. So line 14 of the sales and use tax return is the excess collections. So if you collected more tax than what was due from a customer on a sale, you will enter the amount of your excess collections. Please review General Statute 105-164.11 for additional information. Lines 16 and 17 of the sales and use tax return are for penalties and interest. So here are some of the penalties that we levy at the Department of Revenue. So if your business fails to pay and or file returns timely, penalties and or interest may be incurred. On the screen, you will see the corresponding penalties that can be assessed on line 16 of a business sales and use tax return. Please note that the penalties listed can both be assessed, or they will correspond to which action the business failed to do. On line 17 of the Form E500 is for interest. So on or before June 1st and December 1st of each year, the Secretary of Revenue establishes the interest rate to be in effect during the 6-month period beginning on the next succeeding July 1st and January 1st, respectively. If your business would like assistance with determining what amount to enter on line 16 or 17, you can call the department and an agent will assist in computing the additional amount due. If the return is filed late and or paid late and the lines were left blank, the department will send a notice showing the amount of penalty and interest due. For more information on penalties and interest, we do encourage you to review our website. Lines 18 and 19 of the sales and use tax return are for taxpayers who are monthly with prepayment filing frequency for sales and use tax purposes. As a reminder, taxpayers that meet this filing frequency are those that are consistently liable for at least $20,000 of tax per month. Line 18 is where a business will less any prepayment that was made for the current filing period on the previous month's return. And line 19 is on line 19, a business will enter the prepayment for the next period. The amount of prepayment must equal at least 65% of one of 3 methods that are outlined on the instructions of the form. As stated earlier, if you meet this filing frequency, you are required to file and pay electronically. In reference to line 20, this line is used if you are allowed a credit for sales and use tax previously paid. If this line is completed, you must include with your return a detailed explanation of the credit by providing the documents supporting the credit. If you file electronically, you are required to support the credit being taken by submitting the required attachments for sales and use tax electronic filing, which is called the E-RA. You'll also be required to mail in the explanation and supporting documents. If you are requesting a refund of an overpayment of tax, you are encouraged to file Form E-588, which is the business claim for refund of state, county, and transit sales and use taxes instead of taking a credit on the sales and use tax return. Line 21 will reflect the total due as shown on the return. The method in which your business pays the total due depends on if the return is being electronically filed or not. If electronically filed, you have the option to make the payment via bank draft, in which there is no fee to process the payment, Alternatively, you can submit payment via credit or debit card, in which there is a $2 fee for every $100 increment of tax to process the payment. The card types accepted are Visa or MasterCard. A quarterly or monthly filer has the option to file a paper return rather than utilizing our e-services option. The method in which paper returns are delivered is via hand delivery or mailed. With that option, you have the option to pay via check or money order. If you utilize this method to send payment, please be sure to put your account ID as assigned by the department on the check or money order so that we can ensure the tax payment gets applied to the correct account. As noted earlier, we do encourage the electronic option. If you realize that you made an error on a previously filed return, you should complete an amended return. To do this process, you will access the NCDOR website and complete a web fill Form E500. When filling out the applicable lines, you will complete the return as though an original return was never filed, meaning that you will include the previously filed amounts, plus report the additional unreported tax, or the amended return should reflect the overpayment due. Upon completing the applicable lines, you'll print out the return and then you should provide a signature and title, date in which you are amending the return, as well as provide a phone number. Before mailing or hand delivering the amended return, it is key that you write in the word amended to the top of the form so that the department knows that you are amending information that was previously provided. This process must be done via mail or hand delivery since there is not an electronic option to complete an amended return for sales and use tax purposes. Please be aware that if your business has overpaid taxes that were previously remitted to the department on Form E500, you have the option to amend your return, or you may complete the Form E-588, which is the business claim for refund, state, county, and transit sales and use taxes if your business overpaid tax on retail sales or over-accrued use tax on purchases. Alternatively, if your amended return reflects additional unreported tax, your business should submit payment for the additional tax and interest. For more information on this process, please visit our website. All right, so we have another check your knowledge if you can let Courtney know your response in chat. So we've got the sales price of earrings purchased was $25. The customer purchased these earrings at a show in Wilmington, North Carolina, which is in New Hanover County, that currently has levied a 7% sales tax rate. Would the $25 be placed under the purchases for use column or the receipts column?
All right, they're saying receipts column in the chat.
Perfect. And if you had no other sales that month, what lines would you report the sales on?
All right, so I'm seeing lines 1, 4, and 10.
All right, so it is lines 1, 4, and 10. Great job. And again, if you need additional assistance with seeing how the return can be completed in one county or multiple counties, we do encourage you utilize the online filing and payment videos that we have on our website. So Courtney, before we proceed on, do we have any questions that need to be addressed aloud?
Yes, give me 1 second. Let's
Okay.
see. All right, does the taxpayer get assessed for penalty and interest for returns filed late if they are filing a no tax due return?
All right, great question. So no, the department does not assess penalties or interest for a no tax due sales and use tax return that is filed past their original due date.
Thank you.
All right, thank you. All right, so now we're going to proceed on to additional information. The first topic we would like to discuss in this section is in reference to delivery charges. In the case that your business imposes shipment, transportation, or delivery charges, your business will charge sales tax on the cost of the shipping, transportation, or delivery, even if these charges are separately stated on the invoice. Please be aware that the sales tax charged is at the same rate as the taxable sale or purchase. Additionally, your business must maintain shipping records for all transactions. For additional information, please review Section 22 of our Sales and Use Tax Bulletin. So we've got another question to ask you all. If you can place your question or answer, in chat. So based on the invoice shown here, what amount is subject to sales and use tax?
All right, would that be 140?
Perfect. So yes, in this example invoice, that customer is going to be charged sales tax on not only the widgets, but also that shipping and delivery charge that the retailer passed off to the customer. So great job. Another topic is in reference to nonprofit organizations. So nonprofits are not exempt from sales or use tax in North Carolina, and they must pay sales tax or consumer use tax on taxable purchases for use within their organization. Some organizations, however, do qualify to receive a semi-annual refund of certain sales tax or consumer use tax that was paid to the department. Now, if your entity makes retail sales, they may need to collect sales tax. So please note that if your entity is required to collect sales tax because you do make those retail sales, that amount cannot be included on your claim for refund if you are determined to be a qualified nonprofit eligible to receive refunds. To find additional details on what the requirements are for nonprofits, we ask that you do review our website. And additionally, we do offer webinars on this topic as well that you can access on the website. So the sales and use tax implication for labor taxability continues to be a hot topic at the department. So on this slide, we will briefly talk about repair, maintenance, and installation services, which again is also referred to as RMI. The sales price of or the gross receipts derived from RMI services to real property, tangible personal property, motor vehicles, or certain digital properties sold at retail and sourced to this state are subject to the general state rate, applicable local rate, and the applicable transit rates of sales and use tax unless specifically exempt by statute. This is true even though the RMI service might be separately stated on the invoice. To find additional information on this topic, we encourage you to review the Sales and Use Tax Bulletin, subsection 75. If you have questions on how labor charges affect your business, we do ask that you contact the department directly as well at 1-877-252-3052. Now, in the event that your business sells items or services to federal or state agency, the department has published guidance on our website. So generally, direct sales to the federal agency and direct sales to North Carolina state agencies are exempt from sales tax. Please keep in mind, sales to all other governmental agencies or employees are taxable since the law does not provide a specific exemption for them. For more information regarding this, please look at the Sales and Use Tax Bulletin on our website. Within the Sales and Use Tax Bulletin, you can find additional details about both of these topics and what records must be kept as well. If you're a business located outside the state of North Carolina, the department has published guidance on when you meet the requirement to be considered engaged in business as a remote seller. Effective July 1st of 2024, all remote sellers that have gross sales in excess of $100,000 sourced in North Carolina in the previous or current calendar year must register to collect and remit sales and use tax to North Carolina. This update was part of Session Law 2024-28, which repealed the transaction thresholds. Please note that the guidance issued on the website does not apply to sellers with a physical presence in our state or have any other legal requirement to collect and remit sales and use tax to North Carolina. For more information, please review the Directive SD-24-1 or visit our webpage dedicated to remote sellers. One item that you may be curious on guidance with is how to invoice your customer. Generally, a retailer must separately state and charge tax on the receipt or invoice unless they display a statement indicating the sales price includes the tax. If a retailer includes sales tax in the sales price and does not display a statement indicating the sales price includes tax, the retailer is liable for sales and use tax on the sales price without any allowance for sales and use tax that may be included. Examples of a retailer that may do this include, but are not limited to, art dealers or food truck businesses. All right, Courtney, and before we proceed on to the last section, are there any questions that need addressed aloud?
No questions at this time, Kayla.
All right, perfect. Thank you.
Mhm.
All right. Now that we don't have any questions, we're going to proceed on to the last section of today's presentation, which is recommendations and resources. So as previously mentioned, if your business fails to file and/or pay timely, there will be penalties and/or interest assessed. In addition to the possibility of penalties or interest being assessed, the department does have additional actions in place if your business does not file and/or pay tax liabilities timely. Some of the actions that can be done are listed on the screen. However, I want to use this slide as an opportunity to encourage you to contact the department by phone or visit a local service center if assistance is needed. To assist in maintaining compliance, the department posts guidance on the department's website pertaining to different tax laws that are administered by the department. We encourage you to review the bulletins, directives, and notices that are issued to assist you in your business operations. Just to review which each of them are, tax bulletins are a form of written guidance on the tax laws issued by a division in tax administration every year, whereas a directive is a form of written guidance on the tax laws issued by a division in tax administration, and a notice is an announcement of change in tax law or other important information. The notices and directives are usually published as changes occur. Another resource we would like to make mention of is the Form E-505. This form is updated by the Sales and Use Tax Division on an annual basis, and it includes an overview of many changes to the taxes administered by the Sales and Use Tax Division. Now, those changes were enacted by the most recent session of the General Assembly, and by the time the form is made available, the department would have published notices on many of the topics that are addressed within this Form E-505, but it is still a good snapshot of a given year to see what kind of changes or clarifications were made. I have mentioned throughout the presentation that information is subject to change, so a way for you to stay up to date with tax changes that impact you or your business, we do encourage you to subscribe to e-alerts. If you access our website and select Contact Us and then select e-alerts, you can subscribe to either text or emailed alerts from there. You will have the option to specify which tax schedules you sign up for once you select the method in which you want to receive the notifications. In addition to e-alerts, we also encourage you to follow us on our various social media pages that we have listed here. If you ever need to contact the department for business or personal tax matters, you have various ways to get in contact with us. We have agents available via phone from 7 a.m. to 4:30 p.m. Monday through Friday. In addition to our contact center, we have service centers across the state that are open to the public for walk-in traffic on a limited schedule, and we do also offer appointments. Now, please keep in mind that most, if not all, tax matters can be handled over the phone, but we do want to have the option of a face-to-face interaction as well. In addition to the current webinar you are attending, the department has multiple different webinar offerings that you can attend free of charge. While most of our webinars posted are in English, the department also has Spanish webinars that are held, so if you know anyone that could benefit from them, please share our information. The scope of webinars are for new or prospective business owners, as well as some referencing personal tax obligations with the state of North Carolina. To register and attend another event, you can visit our customer education page on our website, or you can scan the QR code shown here. The department also has on-demand resources on our website. The on-demand educational resources are located under the customer service portion of our website under customer education, so the same way you would access our webinars. Once that is accessed, you will see the current webinar schedule, webinar descriptions, and you'll also be able to access our tax resource library. Within the tax resource library, you will find our on-demand educational resources that are broken down into tax schedules. And as part of that, you can access e-modules, YouTube videos, and webinar reference guides that was first reviewed in this presentation. Now, the final resource that we want to review with you is a resource that is in partnership with the Internal Revenue Service, or the IRS. The Department of Revenue does work with the IRS to provide pertinent information that applies to both agencies, which establishes due dates at both the federal and state level. As noted on the website, the department's due dates can be found in blue, whereas the IRS due dates can be found in green. This calendar can be accessed at any time on the website, and you can look at due dates month per month. So that does bring us to the conclusion of our Sales and Use Tax Basics webinar. As mentioned, Courtney will be placing a link in the chat to the survey. So if you don't mind taking a couple of minutes and letting us know what you thought of today's event, please make sure that you scan the QR code as well to see what other webinars we have to offer. And I do want to wish everyone well with their business endeavors. And thank you for joining us for today's presentation, and have a great rest of your day.